And so the key is going to come down to who wins is around appealing product and around, the software or the user interface. It's around cost leadership, and it's around consistent execution. And Tesla right now is one generation ahead of the other automakers.
I believe what's going to happen is going to be dramatic, and that is, I think Tesla is going to trigger a global price war, deadly for some of the competition. What people don't quite understand yet about Tesla is that Tesla's already making cars in 1/3 the time of Volkswagen. That's 10 hours versus 30 hours. This enables them to make over $15,000 in profit per car. That's twice what Volkswagen makes.
Yeah.
3 times what Toyota makes, 5 times what Ford makes. So Tesla's the only company with room to drop prices.
In this video, we try to answer the question, does 1 + 1 = 2? Apparently, there's a little bit of contention about this issue, so let's try to figure it out. If you already know the answer to this question, you may as well skip today's video, just head over to Patreon and check out the latest exclusive Q&A instead.
If you look at a year to date, that stock is up by about 87%. So there was a lot of expectation and a lot of buildup in the shares heading into it.
Yeah, you're exactly right, Becky. I mean, when you do an investor day, you usually go out, you talk about the company's strategy, you announce either new products or services, and you show them. And then you lay out very concrete financial targets, whether it's revenue growth, margins, profitability. And clearly in this event, they only did the first thing.
Mark is right. Tesla focused on strategy, the how, not the what, but the how, the important thing. How? Half price. More efficient factories, half price compelling electric vehicles. That's how we scaled to 20 million vehicles per year. That's the important part. But I think most of Wall Street and many retail investors were expecting a bunch of computer renderings to new vehicle models. In other words, Tesla's plans, not their strategy, but their plans. We plan on releasing 10 new EV models. Here's this model and that model and this model and that model and this model. Don't worry about how we're going to do it, the strategy, whatever, we'll figure that out. Tesla's approach is the polar opposite of legacy automotive companies who, instead of having a strategy, just have a plan. We're going to release 42 different electric vehicle models by 2025. We're investing billions of dollars building new factories to make our millions of different vehicle models. But dear legacy auto company, you're not telling us how are you going to sell those vehicles? I'm just kidding, I don't need to know that. Show me more pretty pictures. Super important. I did a video on this a while ago, the difference between a plan and a strategy. The strategy is how and the plan is what. The plan is the tip of the iceberg. The strategy is what's beneath the surface, the stuff that actually matters. And of course, Tesla didn't provide any financial targets. Doing so would be asinine. For one, it's not their job. That's the job of the Wall Street analysts, the retail investors, to figure that shit out themselves. And two, when you're scaling up and ramping disruptive technology that's completely upending an entire industry, you're following S-curves. It's insane to provide explicit financial targets at any point in the future, because if you shift that S-curve by 1 or 2 quarters, the numbers can be completely off. Then you're setting yourself up for failure. I've never seen so many big brains break as I have after watching the responses and the reactions to Tesla's Investor Day 2023. Now, to Mark's point, Tesla didn't provide Wall Street what they might have expected from an Investor Day. Instead, they provided what actually matters. I think many on Wall Street cannot get outside the box, can't think outside the box, and therefore, if they didn't give me all the details that we're meant to get at an Investor Day, I can't figure anything out. Disappointed.
That being said, they did lay out a lot of enablers and gave a lot of content on the manufacturing and engineering efficiencies that they're putting in place to reduce costs, which is key to Tesla continuing to grow and deliver, more affordable products off the next generation platform that they talked about.
Bravo, Mark Fields. This guy seems to get it, pointing out that the most important thing was the whole half price, and that's what they discussed in detail, and that's how they get to 20 million vehicles per year. If I didn't know any better, I might suggest that Mark Fields both has a brain and knows how to use it.
Right. I think another key point was that Musk introduced a lot of the other top executives at Tesla, and that's certainly because of the questions that have been asked about his ability. He's been spread so thin by all the other companies he's running, and especially how much time that Twitter seems to have taken up from him at this point. I guess this, to me, even though it may not be what a normal company might be doing at an investor day, it seemed like more normal than the usual Tesla investor day, I think. He didn't make these grand proclamations. He didn't promise things that there's no way you're going to be able to deliver.
You're exactly right, Becky. This was more a traditional kind of investor day. To your point, they trotted out a number of executives that they hadn't shown in any previous presentations, to really take away at least some of the concern that they have about Musk and, the fact that he's, distracted maybe by some of the other business ventures. So they showed, or they tried to show, obviously, the strength of the bench. But they talked about meat and potato kind of things in the auto industry around, how they're driving costs down to improve their margins, what they're doing in terms of supporting the infrastructure for charging, and talking about, in very vague terms, new products that are coming down the pike. So you're right. Compared to previous presentations, it was dialed down about a level of 5 to 10.
Okay, and what has to happen next? I mean, everybody keeps talking about all the competition that's out there, but it's hard for anybody to kind of catch up with the gains that Tesla already has, the first mover advantage and a lot of the research that they've done. I mean, what do you think this market for EV looks like a couple of years from now?
Well, I do think, to get mass adoption, you have to get the pricing down to, the $30,000 to $35,000 range. That's where the market is really going to take off.
More evidence that Mark Fields actually gets it. Anyone watching ever heard any dickhead on the internet say something along the lines of, for a linear decrease in price, there will be an exponential increase in demand? This is exactly what we're looking at. These are ARK Invest projections. Today, we're roughly around this point. A compelling electric vehicle is available for about $40,000 US. If you're lucky, that means the opportunity for EVs may be capturing around 10% market share. If there were a linear relationship between price and potential market share, we would see something that looked a little bit like that. Instead, we see something that looks like that. What's going on here? This is the exponential increase in demand for a linear decrease in the price of an electric vehicle. At $40,000, not in 10% market share. At $20,000, half price. Now, why does half price ring a bell? Half price. I feel like something relating to Tesla's Investor Day 2023 presentation involved half price electric vehicles. According to ARK's estimates, a $20,000 electric vehicle, more than 70% market share. This is the exponential increase in demand resulting from a linear decrease in price. Half price, more than double market size, almost 10 times increase. Tesla's Investor Day 2023 showed us that Tesla has developed a new manufacturing system, a new factory design that will literally allow them to do this. This is incredibly important to understand. I think Mark Fields gets this. As I mentioned in a recent video, it is true. Tesla didn't provide milestones and vehicle models and price points and release dates for every little step along the way. Why? Unnecessary complexity. I mean, this is some big picture stuff, ladies and gentlemen. Half price, linear decrease, half price, exponential increase in demand. That some people still today are a little bit confused about this, I find deeply disturbing. I'm not going to lie.
And it's very interesting. You got Tesla, which started out as a software and a battery company, and is becoming also a manufacturing company. On the other side, you have the established car makers who are basically manufacturing and engineering organizations trying to become software and battery companies.
Confirmed. Mark Fields has a brain, it works, and he uses it. He must be taking AG1 every day like I am. In all seriousness, Mark gets it. He's just described legacy automotive manufacturers as manufacturing companies, although, in fairness, they don't manufacture as much as you might imagine. Tesla is much more a manufacturing company than any of the world's legacy automotive manufacturers. Those are facts. They've in-housed more, they vertically integrated more, they make more components, more things that go in their vehicles than any other automotive company on earth, and it's not even close. Yet, this is the least important factor. Tesla's already better at doing the thing that legacy automotive manufacturers specialize in, manufacturing. But that's not the thing that counts. That's not how you win the EV race. It's important, but the software and the battery tech is what really matters. Legacy automotive manufacturers are clueless when it comes to both. Expecting legacy automotive manufacturers to master software and to master batteries is like assuming that a world-class chef could move horizontally into a career in ballet and become a world-class ballet dancer. It is possible, but I personally wouldn't be betting on it.
And so the key is going to come down to who wins is around appealing product and around, the software or the user interface. It's around cost leadership, and it's around consistent execution. And Tesla right now is one generation ahead of the other automakers.
In fairness, Tesla's more than a generation ahead of the so-called competition, and allow me to illustrate the point. Dear gamer nerds, which is probably the majority of the audience, on screen now is where Tesla's competition is at. This is the state of technology. This is their state of progress. This is how far behind they are. This is their version of cutting edge, breakthrough, next generation. Oh, look at our amazing product. It's so great. Tesla's so-called competition is trying to produce 120 frames per second 4K content on last generation's hardware. This is the result.
But automakers like Ford with their Mach-E and Lightning and Hyundai with their Ioniq vehicles are starting to make a lot of progress. So I think it's going to be very interesting, but Tesla still has the leg up on the competition. And I think they demonstrated that yesterday.
Where's your money on all of this, though, if you had to pick a winner a couple of years from now?
Well, I don't think there's going to be one winner. There's going to be a number of winners and there's going to be a number of losers, because when you look at the adoption of EVs over time, I mean, this is a huge addressable market. In the next couple of years, you're going to see a global market of about 100 million vehicles. So I think you're going to see, businesses like Tesla, which are going to continue to be either the leader or amongst the leaders. You have businesses like, General Motors. They're coming out with a lot of products in the next 18 to 24 months. They have to prove execution.
Indeed. GM have a lot of plans, but they've yet to actually do any of the walking, just a lot of talking.
Ford, I think, is doing a very nice job with their new EVs. And, Hyundai, Kia. So I think there's going to be a number of winners and not just one.
Mark, if you had to look, I mean, some of the proclamations that we have heard, though, that there has to be $10 trillion in spending, that we should get to all EV vehicle and all electric vehicles, those still seem a little crazy to me.
Well, you have to look at the time frame folks are laying out. If you look at what Tesla mentioned yesterday, they want to get to a run rate of 20 million units of production by the end of the decade. I don't see how that's feasible when you look at not only the capital expenditures involved, but you have to get the supply base up and running. You have to be able to execute in a very tight time frame.
All right, so let me show you guys something. On screen now, this is what scaling to 20 million vehicles per year by 2030 looks like, approximately. Now, I don't want to go too far out on a limb here, but show me on the chart exactly where it becomes extraordinarily difficult to continue to maintain an approximately similar level of growth to Tesla's previous historical growth rate. Show me which year, point on the chart. Where does it suddenly become insurmountable or unlikely that they can continue to scale up their production consistently? Show me on the chart where it gets hard, please. Oh, wait. All Tesla need do is continue to execute and scale. That's it. There's no hard part now. The hard part was getting to a point of scale and profitability without going bankrupt. Tesla's there now. All they need to do now is build more factories, build more vehicles, drive costs down, pass those cost savings on to consumers, and sell more vehicles. Again, I ask you, show me on the chart. Which bar? Where does it get difficult? It doesn't. When somebody like Mark Field says it doesn't seem feasible for Tesla to get to 20 million vehicles per year by 2030, I ask the question, on what planet do you live? I'm not saying that it is easy, but what I am saying is there's a very clear, obvious, and consistent path. Tesla doesn't need to do anything extraordinary. Let me spell this out. Stage 1 of Austin, give or take, maybe 500,000 vehicles per year of capacity. Stage 1 of Berlin, about 500,000 vehicles of capacity. When fully ramped over time, I believe Austin and Berlin will each be producing well over 1 million vehicles per year. If true, Berlin and Austin, in a few years' time, combined will be producing as many vehicles as Tesla's current global production capacity from 4 factories, 2 of them barely ramped. Tesla will only need to build, give or take, maybe half a dozen to a dozen more factories, and they'll be there. There's no magic breakthrough necessary. Tesla unveiled plans to halve the cost of their vehicles, to have much more space-efficient and time-efficient factories. This is not only feasible, but inevitable. Now sure, maybe Tesla will be a year or two late getting to that 20 million vehicles per year target. Maybe Tesla will grow to 30 million vehicles per year by 2035. Again, I ask the question, where exactly does it become difficult or not feasible for Tesla to continue scaling their production and driving their costs down and passing those cost savings on to consumers and therefore selling more vehicles? They're already profitably producing the world's best and most compelling electric vehicles at scale. They already have insane demand and insane pricing power. This isn't infeasible. This is inevitable.
But over the arc of time, I think you're going to see the entire industry, have a number of stranded assets from as ICE vehicles kind of melt away over time. But it's going to take a long time. But this transition is happening. And the question is, what's the cost, and are investors going to want to provide the capital?
Stranded assets is quite the understatement. And the impression that I'm getting from Becky here, who just doesn't seem to compute, and Mark Fields is very skeptical about this ramp speed. It seems like most folks today still just cannot fathom how quickly this transition is going to happen. Again, I referenced some of the expert predictions about how many EVs will be sold as new vehicles as a percent of the overall market in 2030. My best guess is that by 2027, at least 80% of all new vehicles produced and therefore purchased on Earth will be electric. Honestly, I struggle to figure out why anyone would still be buying ICE vehicles at this point in time, except secondhand in third world countries. It's probably going to be closer to 100%, but look, I'm not going to go that far. Yet, for some strange reason, no one else seems to be on the same page aside from the folks at ARK Invest and Rethink X. It's quite simple. EVs are approximately price parity today, and they're much cheaper to own and operate. And Tesla's just unveiled plans to halve the cost of their already price parity vehicles. How much brain damage, and I really mean this question, how much brain damage does a consumer need in 2026 or 2027 to make the decision to purchase a significantly more expensive to own and operate, not just purchase price? Way more expensive no matter which way you look at it. Significantly more expensive per mile in terms of propulsion, to recharge versus refuel. Significantly more expensive for maintenance. Worse performance. Higher cost. Pollutes. How much brain damage will a consumer need at this point in time, the second half of this decade, to voluntarily purchase an internal combustion engine vehicle, knowing full well they're going to pay way more and get way less? I still don't know an answer to this question. This is a fundamental part of my thesis. Who's going to be buying ICE vehicles in the second half of this decade? Another question you may have asked, 15 plus years ago was, who's going to be going to a Blockbuster store to rent a movie now that we can stream them on demand online and not have to worry about postage, returning videos, etc.? If you had to ask Blockbuster this question back in, let's say 2008, 15 years ago, their response would have been, plenty of people are going to want to continue to come to our store because it's not like there's a better, more disruptive way of doing things that consumers are going to prefer because it's so much better. Everything's going to be fine, don't worry. 2 years later, Blockbuster filed for bankruptcy. We're seeing round two. The same question. Go back in time. Just as digital cameras are starting to appear on the scene, you might have asked the question, considering the price of these things keeps plummeting and image quality and resolution continues to increase, who, aside from art students and people with a Polaroid fetish, are going to want to use traditional film, take pictures, not know what they're going to look like, have to go and get them developed, pay money, spend the time, when you could just snap them digitally? The answer to that question would have been approximately nobody. Yet Kodak would have told you, oh no, don't worry about it, everything's going to be fine. There's still going to be people buying traditional film cameras years from now, decades from now, everything's going to be fine. There's no way that these digital cameras could take off so rapidly. And you know the funny thing, right? Digital cameras are now gone as well because the smartphones completely replace them. This is what happens when there's a disruptive technology. People cannot imagine how quickly the disruption happens. And next minute it's like, well, how'd that happen? Blockbuster's going bankrupt? Kodak's going bankrupt? What's going on? Who could have seen this coming?
President and CEO of Gerber Kawasaki, Ross Gerber, joins us now. Ross, great to have you with us.
Thanks for having me.
What you had tweeted that some of the stuff that you saw was insane in the factory. So what exactly got you most jazzed about its vision for reducing costs for the next gen vehicle by 50%? Because that's a big number.
Right. I mean, it's all about battery cells. And when I originally went to Battery Day years ago and saw the prototype factory for cell production of the 4680, it was kind of like this new little whiz-bang thing. And when I went to the factory yesterday and saw what it's become, it's incredible because they've been able to shrink the footprint for manufacturing these cells to quite a small size. And it allows them to build these factories all over the world much more efficiently. And battery production is really the key to alternative energy's success for energy as well as for EV and transportation. So the 4680 cell is probably one of the most important technological advances in modern history. And when they achieve this, which hopefully will be very soon, it's going to bring Tesla to the next level.
Ross is right. And do you guys remember Battery Investor Day 2020? How did Tesla stock react after Battery Investor Day 2020? How did the stock market react? How did investors react? How did the experts react? How did the automotive industry react? How did the battery industry react? The answer is approximately the same way they reacted to Tesla announcing that they've developed a new manufacturing system to literally halve the costs of their vehicles. Stock goes down and everyone's like, this isn't really a big deal.
He also spent a lot of time talking about moving away from a lot of the raw materials that battery technology is reliant on now. Talked about a lithium iron phosphate battery, so an iron cell based battery, which is used in China right now. So it's out there right now in commercially produced EVs. He also talked about moving away from rare earths, and you see the consequence in shares of MP Materials this morning, which is down about 13% on this notion that you can actually engineer rare earths out of the process, Ross. And I'm wondering, how quickly you said it's going to happen sometime in the future, but as a bull and as somebody who is invested in the stock, how soon do you want to see this? What are your expectations on timeline?
Well, first of all, I think that when Elon is laying out a plan, he's talking about very long term, and his vision is very broad. So a lot of the things he said and the markets are reacting to today are very premature because we're very far away from doing all those things yet. And the chemistry of building a battery is quite difficult and complicated. And so like all these are ideas that are incredibly efficient ways to improve battery production, but haven't actually been invented yet. So I think the market's maybe a little bit rushing to judgment, not to mention all the other EV players that need magnets. I own MP in my fund GK. MP is a great company, and they make these rare earths that are crucial to motor production. So we don't see anything on the short term to affect these companies. But longer term, I think for an electric future, we have to be very efficient with the use of the commodities involved.
Hey, Ross. Even Goldman today says the ability to cut your cost in half is huge. But then they say, look, people were looking for a third generation vehicle, or at least some specifics. This is a company with a magical ability to form narratives. They rolled out a prototype for the Cybertruck. Why not this time?
Well, I think, one of the things I was pushing on, and pushing towards the board was really more transparency about management and the teams that are running Tesla. And that was the purpose of yesterday, was really to introduce everybody to all the different teams that work at Tesla and the way Tesla's organized. And I thought they did a great job clarifying their organizational structure, which was one of the things I really wanted to see. Although, Elon is still sort of the king of the heap there, and there isn't really a number two. But what we saw was a really great group of engineers building incredible technologies that'll advance, Tesla into the future. But when you're talking about vehicle launches, those are like parties, like when Cybertruck launched or Model 3. I've been to these launches and they're super fun and they're parties. This was for investors, and everybody there was institutional investors. There were no goofballs there. It was like a really serious room of investors. And so I think they want people to understand where Tesla is going long term, and I think they did a very good job articulating that. But I think people had they want a show, like that's what I do well, put it on the show and make it fun, and that's going to happen soon when they launch this vehicle. But I think they're still finalizing the design.
Some fair points, although I do disagree in terms of the vehicle design. I'm extremely confident it's already done. In fact, I'm extremely confident multiple vehicle designs for Tesla's next-gen platform are done. It's just insane for Tesla to unveil what they look like. Because immediately, if there's a picture, it goes everywhere in the media. Tesla's new vehicle, blah, 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 look at it. Next minute, many people who've already reserved and or ordered and or are thinking about purchasing a Model 3 or Y think, half price, just as good. Yeah, I might wait. Bad idea. Tesla would have been absolutely insane to show anything. This is one of those things that I would assume would go without saying, but apparently not. Tesla will have an unveiling. They will have a launch of their next-gen vehicle, the first of many, on the new platform. But as I've said in the past, Tesla's going to want the gap between unveil and first deliveries to be as short as possible to minimize the Osborne effect. My prediction is that once Tesla's New Mexico factory is close to commencing production, that is when we're going to hear about and see the first of the next-gen vehicles. Tesla's going to do a big unveil. Here it is. You can reserve one now. First deliveries will commence in a few months. Now, I could be wrong, but I probably won't be. And the key caveat here, the reason that Tesla was able to unveil the Cybertruck without too much concern about the Osborne effect is because it is so starkly different to a 3 or Y or an S or X. Whereas the next-gen vehicle is going to be a much more affordable 3/Y. Similar features and functionality, maybe a little smaller, maybe a little less range, maybe less acceleration. In fact, all of these will be obvious facts. The overlap of consumers who see a 3 and Y as comparable to a Cybertruck, not so much. I think what I'm trying to say is Tesla knows what they're doing, and they will unveil their next-gen vehicles only when it makes sense, which is just before first deliveries begin.
When we look at the master plan for sustainable energy economy, how much do you think that we have to take Elon Musk at his word here?
Well, look, Elon has a tendency to go overpromise a bit. But here's why this is a big deal today. Every auto company in the world is going all electric. And the reason is simple. They're safer, they're lower maintenance, they're faster, more fun to drive, and they're greener. There's only been one big headwind, and that's been cost. And Tesla is about to change that. So today, I think you'll hear them announce a dramatic reduction in manufacturing costs. And again, that comes down to lower battery costs, larger stamping machines, which means they can produce cars more quickly with fewer parts than ever, as Nigel just alluded to, more robots, and so on. All this leads to lower cost. I believe what's going to happen is going to be dramatic, and that is, I think Tesla is going to trigger a global price war, and it's going to be great for consumers, deadly for some of the competition. And what people don't quite understand yet about Tesla is that Tesla's already making cars in 1/3 the time of Volkswagen. That's 10 hours versus 30 hours by using advanced manufacturing techniques. This enables them to make over $15,000 in profit per car. That's twice what Volkswagen makes, 3 times what Toyota makes, 5 times what Ford makes. So Tesla's the only company with room to drop prices.
Important point here. Tesla is the only company who can afford, literally can afford to drop prices. They have huge pricing power, industry-leading margins, 2, 3, 4, 5 times more profitable than other automotive manufacturers. We know today, outside of China, there are no vehicle manufacturers on Earth who are profitably producing electric vehicles at scale. None. Not only is Tesla profitably producing them at scale, but they are many times more profitable at scale than anyone else could even hope to be. Again, I go back to the example. Tesla's profits compared to every other automaker on earth, unless you look at a company like Ferrari, whose vehicles cost a few $100,000 per inch added and have insane margins. Tesla is close to Ferrari-like profit margins on vehicles a fraction of the price because they've driven their costs down so much. They have insane pricing power. No one else is even in the game. If you want to compete with Tesla on price, you must sell your vehicle for a loss, not a lower profit margin, a loss. It costs Tesla significantly less to produce their vehicles than their competition, meaning Tesla can price their vehicles significantly cheaper than the so-called competition and still make a profit. Whereas Tesla's so-called competition, if they want to compete on price, they cannot make money selling these vehicles. I mean, do I really need to explain how this ends? If you can't make a profit, but you can't sell a vehicle unless you compete on price, therefore you have to sell vehicles for bigger losses. Bigger losses, more vehicles sold with bigger losses equals you go bankrupt.
Steve, how low can they go when you think of a cheap auto, when you think of what price point they could unveil? How damaging could that be for Tesla's own margins?
All right, so I'll need some help here, folks. I have a very small brain. I'm really bad at math. So let's just walk through an exercise here. If Tesla has figured out a new manufacturing process to literally halve the cost of a compelling electric vehicle, that means Tesla could sell said compelling electric vehicle for half the price of a current electric vehicle, let's say a 3 or Y, with an identical profit margin. Because math, if Tesla doesn't sell the vehicle for exactly half the price, they could sell it for a little bit more than half and have an even bigger profit margin. The question is, will Tesla need to sell their vehicles for even less than half price in order to continue selling them? If so, that would mean an even lower profit margin. But again, going back to the earlier example of the automotive market, this next-gen platform is going to unlock 3/4 of the entire auto market. I think Tesla's going to be selling these vehicles for more than half price. It's impossible to know exactly how things will play out. But again, I'm not that good at math, but if it costs half as much to make, you can sell it for half the price with exactly the same profit margin. Am I missing something? Seems self-evident.
Well, look, again, they've got quite a ways to go, but they're leading the world in batteries. And as you know, batteries are roughly a third of the cost of the vehicle. They're also way ahead of the others in what's called over-the-air software. And this new next-gen robotization of manufacturing, bigger stamping, fewer pieces, faster production, this all gives them an edge. And the simple fact is they're about 3 years ahead of everybody else in terms of manufacturing. GM, Ford, trying to build a new plant here or there. Tesla's got 5 plants up and running today, a 6th just announced in Mexico. They have not only established themselves as the fastest growing auto company in the world, 50% growth last year, and but the most profitable. What's not to like about that?
Shares down about a percentage point now in after-hours trading, Steve. You may have seen my reporting last week that Ross Gerber had suspended his attempt to gain a board seat, in part because Tesla had moved to allay some of his fears. I'm looking at the speakers so far. Zach Kirkhorn, CFO, opened up the show. Elon did speak, but so did Drew Baglino, Franz von Holhausen, and now Lars Moravec. How much do you think this is them trying to demonstrate that there is a plan outside of Elon Musk, a succession plan?
I think the message is loud and clear. You don't invest in Tesla just because of Elon. You invest because it is the leading EV company in what is an EV world. And again, just look at the facts. Everybody else, 1 or 2 EV plants up and running. Tesla's got 5 heading to 6. Nobody else has the capacity to grow like Tesla will this year. No other auto company in the world is coming close to 50% growth. Add to that the highest level of profitability. This is a tough story to beat. Now, there's one other story that almost nobody has talked about today. You're going to hear Elon and the Tesla group address it, and that is they are no longer just an auto company.
Oh my God, bro, trigger alert. I think Steve Wesley just implied that Tesla is not just a car company. That's not what I heard. I feel unsafe. Who do I call to get him fired? That's such a controversial statement. I don't know why he would say something so brave and accurate.
They're an auto and an energy company, and what they have to sell is powerful, and that is Tesla, and Tesla alone can sell you the electric car, solar panels for the roof, power wall for your home. They can help you create a world where you'll never have to pay.
Hold on, Steve, hold on, because as Caroline pointed out earlier, a lot of this was in Master Plan Part 1 and 2, and much of that seems unfinished. That's why we ask, should we take some of this with a grain of salt? Because we might not see it materialize for another decade, if that.
You're seeing it materialize now. And look, I'm not going to tell you Elon doesn't occasionally overpromise and underdeliver. He does. But even when he finally gets there, he's way the heck ahead of the competition. So they have already offering this turnkey solution around the country. Energy revenues are going up. They're now producing mega packs. This is 1.5 megawatt storage to universities, large corporations, hospitals. It's all rolling out now. But I think the big picture today is going to be Tesla is creating an ecosystem. It's more than an auto company, but it's a pretty darn fast growing auto company as it is. And the extent they can cut costs while they go global with a pretty good product, gee whiz, that's a hard story.
What's so difficult is supply chain here, time and time again. How will the movement be hindered by access to lithium, to cobalt, to copper?
I think that story's been really over-reported. And again, 4 or 5 years ago, we all heard it, buy my lithium mine now, or you got to go to Mongolia. They're the only people in the world with rare earth minerals. This turned out not to be the case. 2 quick points. One, lithium is actually one of the most plentiful minerals on the planet. There are lithium mines all over California and the western half of the U.S. You do not need to go to Bolivia or Mongolia. And the mines are opening up now in a response to rising prices. Second, it was those rare earth minerals like cobalt, manganese, nickel that were going to be tough to get to. You can only find them in the Congo. Not so. Prices peaked for a little bit. You're now seeing cobalt in particular at lowest prices we've seen in some time. So the market is responding. Elon and the Tesla team were fairly smart to vertically integrate earlier than the others. I think it's going to give them an edge.
I don't know why Steve's downplaying this so much. He thinks Tesla's extreme vertical integration is going to give them an edge. It has, and will continue to do so, an untouchable edge.
Yeah, sources told me that actually they're looking at a number of mining options and weighing up what's best for them. The stock's up more than 60% year to date. We asked our audience if this event right now is going to act as a catalyst for the stock. The audience relatively split, right? Some say yes because of what that's going to be announced. Some others disagreeing say no, this is a sell the news event. To your mind, based on how much you've heard, how high is the bar here for Tesla to prove that big things are coming?
Well, look, last year was a bad year for Tesla. He was caught up in headlines about Twitter. He personally sold $40 billion worth of shares, mind-boggling number. That pushed the share price down. But when it comes to smart investing, look at the boring stuff like the numbers. 50% growth 2021 to 2022. They're going to do the same thing this year. Huge profitability. And the really boring part is inside the factories that most people can't see, you're going to hear again and again about state-of-the-art manufacturing improvements, cost-down curves that the incumbents for some reason haven't figured out. And don't take my word for it. Just look at the average profitability per vehicle. They've got an edge, and I think they're going to be ruthless in pursuing it. They've just taken prices down roughly 15%. If they take them down another 15%, that is awfully hard for the others to keep up with.
He ain't wrong. Most compelling product, most profitable product, a plan to halve the costs of a compelling profitable product. It's game fucking over. So just to recap, Tesla should definitely spend a lot more time making their presentations even slicker and a lot less time figuring out how to halve the cost of a compelling electric vehicle, according to the peanut gallery. You understand, Tesla? Those big brain engineers should be applying those big brains to rehearsing presentations, more bells and whistles, more pretty computer renderings, and less new ways of manufacturing a vehicle. Oh, and they should also then spend even more time joining every single dot so that Wall Street doesn't need to do any of that. But other than that, Tesla continues to execute fairly well, and once they can get their PowerPoint presentation skills up to scratch, we've got nothing to worry about. But until then, Tesla should definitely spend more time making their presentations better and less time driving the cost of their products down and making their products better. Much better use of their time, energy, and mental resources. Wait, why do I sound like a moron right now? Oh, I haven't had my Athletic Greens AG1. But don't take my word for it. Here are some extremely legitimate testimonials that I didn't make up regarding Athletic Greens AG1. Before I started AG1, I didn't understand that half price would mean more demand. Glad my brain is working again. From Richard Cranium III. Shout out to Richard. I used to think the competition was coming. Thanks for showing me the light, AG1. From Dingbat McCNBS. What a weird name. And one more. Within a week of starting AG1, I got fired from my analyst position because I told my boss I thought a $25,000 Tesla would help Tesla scale to 20 million vehicles per year. Now I don't have a job, but at least my brain is working. Alright, enough trolling. I will actually show some real testimonials now. My AG1 came in yesterday. Oh my god, does it have an immediate effect on mental acuity? Woke me right up. Looking forward to the longer term effects. Thank you SMR for recommending this product. Love the taste too. You're welcome. Reading about other people's comments about AG1, I'm starting to suspect there's some kind of secret ingredient, like amphetamine or something. I can confirm there are no amphetamines in AG1, but there certainly are a number of things that will help boost energy. It's amazing how good and energetic you can feel when you're giving your body everything it needs. Been taking AG1 for just over 2 weeks now. Incredible difference and no more afternoon fatigue. Completely agree with the feedback left on AG1. Been taking it for just over a month. Feel amazing. I'm working out harder. Feel sharper. Keep pumping it. I will. I've been drinking AG1 since early January and my fatigue has dramatically decreased and my energy, but possibly more importantly, my motivation has increased. I'm so much more productive. After taking AG1 for about 45 days, I honestly can't remember feeling this well, both physically and mentally, ever. Obviously, these testimonials prove beyond a shadow of a doubt that AG1 is garbage, you won't feel or perform better, it won't help boost your energy, won't do anything whatsoever to improve anything about anything. And if you happen to think, well, why would people in the comments say things that suggest it actually has massively improved their overall well-being, their energy levels and so on, the only logical conclusion is that I paid them to write these comments. They definitely didn't use the link in the pinned comment or head to athleticgreens.com/SMR and take advantage of the offer of a 1-year free supply of vitamin D3 and K2. After all, that would be too simple and obvious. Just like half-price vehicles would kind of be simple and obvious in terms of how Tesla gets to 20 million vehicles per year. And obviously, if it's simple and obvious, it can't be true. And plus, I know that everybody watching doesn't have any nutritional gaps and couldn't benefit at all from another 75 high-quality vitamins, minerals, and whole food source nutrients. Everyone watching has perfect digestion, doesn't need any digestive enzymes, doesn't need any prebiotics or probiotics or adaptogens. But if on the odd chance anyone watching is a skeptic and thinks, you know what, maybe I might feel and perform a little bit better if I was optimizing my health and my energy, I'm not going to stop you heading to athleticgreens.com/SMR. After all, there is a 90-day money-back guarantee, so if for some strange reason you don't begin to feel and perform better, no risk to you. Oh, and speaking of risks to you, if you're willing to risk getting butthurt and offended, you're definitely going to want to watch the latest exclusive Patreon Q&A, dropping within a few hours, if not already. If you're not a member of Patreon, you can join with the card in the corner or the link in the pinned comment, and I'll see you over there, if you can handle it. Love ya.